Hello all, hope you're doing good. Please like and subscribe to the video, and also please press the bell icon so that you will get the notification whenever I post a new video. Today's topic is about a great rocking news about Indian investors. So as you can see here, uh, Amphi, this is says assets under management has crossed 50.78 lakh crores as on December 31st. I think this is the first time which has happened. So our retail investors like us, people like us, actually started investing in the SIP mode, so that I think every month the monies keep on flowing to Indian market. So this is really very good news. So earlier it always it was mainly driven by uh, foreign investors, FIIs and FPIs they are called. So whenever they used to pull out the money, the market used to crash. From last to 2000, after 2020, even the COVID happened, and after that the market was also corrected. But because of our inflow of lot of money from our retail investors, the market even did not fall down. So this is a great news. That means this will always give a stability to our Indian market, and it's also give confidence that your money will not go down or something like that. You can think of 50.78 lakh crores. It's too much money, and and also there is a lot of advertisements. You would have seen, even while watching the cricket match and other things, you are getting a lot of advertisements for mutual fund. There's a lot of push from the mutual fund companies as well. Because of that, people are also getting educated. Even though market fell down that time, the people, they did not withdraw much of SIP money. That's why the market did not fall down. Because of that, people are also got a lot of returns. If you see from last 1 year 2 years time, and now people are sitting at a very good profit at 30% like that in their mutual funds. Of course, it depends on when you entered it. Those who entered earlier, when the market was around 20, Sensex was around 21,000, and now we can see it is almost like 72,000. It's almost like tripled kind of thing. So that is one good news. So let me also show you the amount of money which is flowing. As you can see here, this is also giving the let's see here, first one. So what is the amount of money which is flowing? In the month of September, it was 12,976 crores. And if you can see here, it keep on climbing up like this. Currently December 2023, 17 point, 17,610 crores flown into mutual funds. I would just like to reiterate my first video is why everybody should be there in share market. I will also put the description in the link. Please would watch it again. And this also reiterate it, why everybody should be in the market. And also you should not get scared, because the market is already at 72,000. Sensex is at 72,000. There is also a chance of it will correct. It will always like that, goes up and down like that. But if you see in a long term, it has always come up. From 100, it has come all the way up to 73,000. If you see after 5 years, by 2030, it will be 1 lakh. Sensex will be at 1 lakh. So maybe in between there is a correction. You should not get scared about that. And if it is, if it is at all time high, you should not also invest too much money. Means doing SIP is good. You should not bring a lot of money directly, and you should not put a lot of money directly as a direct investor or one time investment kind of thing. This is not the right time. You should wait for the market to correct. It will always correct. The history says that it will always correct. And also, as you can see here, this is also on the caps. What is happening: small cap, mid cap, and large cap. So they are withdrawing a lot of money actually from the large cap and putting it into small cap. This is also not good idea actually, because its market is at all time. Better to put it in large cap, so that the beta, the correction percentage is less in large cap. If you get into small cap, it's always dangerous. So anyway, this is just the data I wanted to just show you. And before closing the call, I would also give two datas, which will also help you. So if you see here, share of adults investing money in the stock market in the United States from 1999 to 2023, it is 61%. That means 61% of the adult in US are investing in share market either via mutual funds or ETF or directly into stock pickings or something like that. But if you compare that with India, I'll show you in the next slide. It's only 17% of the household. That too, it's not adults. It's household. I mean, 17% of the people uh, houses are investing. Maybe in a house, maybe one person may be doing it. Other person even not aware, not even aware of share market or something like that. So this also gives another study. There is a huge scope. You can think of 61% of the households and adults start investing into share market, so it's a huge money which will flow to share market. And also it gives a stability to the share market. Even the market corrects globally, it will not correct so much. That means you will not get scared so much, and you will not withdraw money, and you will keep it for long term. Even though of course if everybody comes to market, maybe the returns percentage can reduce. Currently, from if you see the history from last 20 years, it's easily giving like 12 to 15% on average. I mean, of course, now I've also shown you the market is all-time high. Because of that, some of the mutual funds also given like 25-30% because you're looking at now. Otherwise, 12 to 15% is an average. But if everybody start investing, that maybe the returns may come down to 10, but still it's very, very good compared to FD and other assets. So I hope this video also helped you, and also to understand the kind of money which is flowing into mutual funds and share market. If you're not in share market, I mean, I know that you're going to come to share market. Maybe if you don't want to, if you're not convinced now, you will come in 10 years time and 15 years time, but it will be too late. You cannot make a lot of money. That's why I would recommend everybody to get into share market either via mutual fund or ETF, or maybe direct stock investing. Thank you so much, and please subscribe and support. Bye for now.